Good afternoon, everybody, and welcome to today's webinar on paternity pay in Sage 50 Payroll. My name's Alice, and I'll be presenting today's webinar. So I'll start with an introduction to statutory paternity pay and a little bit about the new legislation for the tax year as well. Then move on to recording paternity pay in Sage 50 Payroll. I'll then show you how you can adjust your employees' payments for a few common scenarios, followed by how to reclaim statutory parental payments, and a little section on troubleshooting too. And at the end, I will keep the webinar open for a few more minutes just to make sure that we've answered as many questions as we can in the Q&A. So moving on to the introduction then. So what is SPP? Well, it stands for Statutory Paternity Pay, and it's a payment that employers make to eligible employees if they and the partner are having a baby, adopting a child, or having a baby through a surrogacy arrangement. Paternity pay is the payment due to the partner of the mother or the main adopter. The entitlement means that employees can either take 1 or 2 weeks leave, and if the employee is taking 2 weeks, these can either be taken consecutively or separately and taken within 52 weeks of the year after the birth, which is the new legislation in this tax year for England, Scotland and Wales. The rules in Northern Ireland are a little bit different, with employees being able to take either 1 week or 2 consecutive weeks leave taken within instead 56 days or 8 weeks of the baby's birth or placement. An SPP is paid at a weekly rate, which is now £184.03 a week, or 90% of the employee's average weekly earnings, whichever is lower. So let me begin with some of those changes in the new tax year then. So for babies expected after the 6th of April, paternity leave and pay can be taken within the first 52 weeks following the birth or placement. And paternity leave can also be taken as either a single block of 1 or 2 weeks or 2 blocks of 1 week, which of course don't have to be consecutive anymore. And employees will need to give 28 days notice before the date that they intend to take each period of leave. So the examples in today's webinar will be following these new legislation changes for a baby due after the 6th of April 2024 in England. And let's take a little look at the eligibility as well. So to qualify for SPP, employees must have worked long enough, earn at least £123 a week in the 8-week relevant period, and give you the correct notice, and be responsible for the child's upbringing. And there's a little bit more to it, so for more information on eligibility and also what to do if your employee is not eligible, I have included a link at the bottom of this slide which will take you to the gov.uk information on paternity pay, entitlement and eligibility. So they will have a lot more detail on there. And I would like to show you now a timeline of key dates around SPP, working back from the due date, which is also known as the expected week of confinement. Going back 15 weeks, this is known as the qualifying week. And back a further 26 weeks from that, this is the latest start date an employee can start working with you to qualify for SPP. We've then got the 8-week period where the average weekly earnings are calculated, and this is the 8 weeks leading up to and including the qualifying week. The earliest date that SPP can begin is the date that the baby is born. So if an employee does want to go on leave before the baby's born, they would have to use holidays, as SPP can't kick in until the baby's born. And last key date on here is the date that the paternity leave must finish by, which of course is now within the first 52 weeks following the birth or placement in England, Scotland and Wales. So as I mentioned, that is one of the major changes for SPP in the new tax year, and different rules apply in Northern Ireland. I would like to explain a little bit about reclaiming statutory payments before we move on to recording paternity pay. So any statutory parental payment can be reclaimed from the government. Most employers can reclaim 92% of the statutory parental payments paid out. But if you're eligible for small employers relief, you can claim 103% instead. So 100% of the payment and 3% known as NI compensation. And you'd qualify for small employers relief if your total Class 1 national insurance contributions are £45,000 or less in the tax year before the qualifying or matching week. So in this case, if your total NI contributions were £45,000 or less in the 23-24 tax year, you will be eligible for small employers relief in the current tax year, so the 24-25. And that's why I'm mentioning this now, so you can check this setting before you process any statutory parental payments in the tax year and ensure that you're reclaiming the correct percentage based on your company and based on your circumstances. And this goes for all statutory parental payments too. So I would like to show you how you can check your total national insurance contributions for a previous tax year and also find where that small employers relief setting is to enable it if you're eligible. So I'm in my payroll, and the easiest way to do this is change your process date to the last day of the previous tax year, which will be, of course, the 5th of April 2024. So I'll just change that. And from the payroll link section, you'll see a link to the P32 report. So I'm going to click on this. So normally you would run this one tax month at a time, but I'm going to actually run it for the whole tax year. So I'll change the criteria for months 1 and 12. And here is the P32 for the whole of last tax year. So on this report, line 4 is the figure that you're going to need. So make a note of this. I can see that mine's £33,750, so that is £45,000 or less. And as a result, I do qualify for small employers relief in the current tax year. So that's line 4 on the P32. And now that I've checked this, what I can do is move my process date back to the current tax year. So I'm going to change mine to my next pay date, which is the 30th of April. And I'm going to go and enable that setting in the company settings. So company and settings in the top left. And I can find that setting just on the right hand side where it says eligible for small employers relief for 2024-25. So if you do qualify, tick this box. If you don't, of course, just make sure it's unticked and then click OK at the bottom to save those settings. And we will come back to reclaiming statutory payments a little bit later in the webinar. So moving on to recording paternity pay, there's a few main things that you're going to need. So you're going to need the dates that your employee wants their paternity leave to start, a declaration which includes the baby's due date, which is most commonly known as the SC3 form, and you're going to need the date that the baby was born as well, which is the earliest date that the SPP can begin. And once these dates and details are in Sage 50 Payroll, the programme's going to automatically calculate the amount of SPP due in the current period and all in line with current legislation as well. So let's go back to Payroll and we'll record some SPP. There are a few ways that you can record paternity pay. So I'm going to record it via the quick SPP option, but I will also show you the other way and you can decide which way that you would prefer. So employee number 2 is the one going on paternity leave. So I'll highlight them. And either from the payroll link section, so we'll see recording paternity there, or from the employee tasks, I'm going to open up recording paternity. And this is the quick SPP option which I mentioned. So it is a really convenient place to record paternity. Everything's all in one place. To begin with, I'm just going to tick this box at the top to say that I've received the declaration. So the employee has given me that SC3 form. And I'm going to put in the expected date of birth as well, which for my employee's baby is the 14th of April. I'm then going to click on Check Entitlement, and that's Payroll's way of checking if these qualifying conditions have been met. And that's based on the timings and key dates that I mentioned a little bit earlier on the timeline. So we've ticked that the evidence is received, so that's a yes. Have they worked long enough? So is the employee's start date at least 26 weeks before the qualifying week? Yes, it is. And have they earned enough? So that means, have they earned over an average of £123 a week, which is calculated in the 8-week period leading up to and including the qualifying week? And that's a tick as well. And speaking of earnings, we can see just underneath, the payroll has worked out the average earnings for the employee. which is £461.54. If you are curious how payrolls work that out, you can click on earnings during set period, just in the bottom left. And that is going to bring up those payments that payrolls use to calculate that average. So we can see during that 8-week period, my employees had 2 monthly payments of £2,000, which have been used to calculate that average of £461.54. There's also some key dates on the right-hand side as well. So these are based on the due date that's been entered. And the entitlement for paternity pay won't calculate until the last day of work, and of course the actual date of birth as well has been entered. So just in this table on the left-hand side, we've got the option to enter a last day of work for week 1 and week 2. So as I mentioned, the employee can take either 1 or 2 weeks leave. If the employee is taking 1 week, just enter that date in week 1, or if they're taking 2, enter both, and remember they don't have to be taken consecutively. So my employee's last day of work for week 1 was the 14th of April. And they do want to take a second week later on in the tax year, and they've given me plenty notice for that. So that is the 21st of October 2024. So the programme now allows that to be done non-consecutively with this table. So these dates that I've entered, these are actually the day before that the SPP payments are going to begin for each week. So with the last day of work being the 14th of April for week 1, the actual paternity pay will start on the 15th, and with the 21st of October, the SPP will begin on the 22nd. And last but not least, I'll just need to enter the actual date of birth, as that's the earliest day that the SPP can begin. And for this baby, that's the 15th of April. Once I've entered this date, I'm just going to click Tab on my keyboard. And now if I look in the bottom right, I can see that entitlement is showing there for the employee. So it's showing the full 2 weeks that this employee is entitled to, with that rate of £184.03 a week. Other than that, you've got special circumstances on the left. So this is just to use if the employee has been absent due to a trade dispute. So you just enter the number in there and click OK. But other than that, once you're happy with all of this information, just click Save at the bottom. And I would advise as well just clicking Print in the bottom left. This is going to be a nice summary of the information for the company. So mine's going to go to a PDF so I can show you this. But let me just save this. I'm just going to call it SPP. And if I open that, this is what it produces for you. So it's just a summary of the information that you've put in the SPP, and you can keep this as a company copy or of course provide it to the employee as well. And that is the employee all set up for paternity pay. And remember, that was via the quick SPP option. Now another way to enter SPP is in the employee's record. So we'll go in there and we're going to go to absence. And just at the bottom, we've got SPP. Now, since we have already recorded it, we can see there is already information in here. But if you were recording it in here, it's the same information you're going to need, just in a slightly different layout. So we've got the dates on this first tab and the little tick box to say that you've received the declaration, and also the auto calc button, which you would click for the payroll to work out the average earnings. We've then got the 8 weeks gross tab. So this is showing that the payments that payroll's used to calculate that 8 weeks average earnings. And as well, at the top, you've got confirmation of that qualifying week as well. And last tab in here is the entitlement tab, where we can see that first week is showing as currently due, as it's in April, but the full entitlement of 2 weeks is showing for that employee underneath. So one of the things that can catch people out with statutory payments is your process date in the programme. So if my process date for was before the SPP begins, so before the 15th of April, nothing would calculate or show in this top table, so it'll show us all zeros. But if I just close this now and go to enter payments, I'm just going to show you in there as well. So my process date's actually the 30th of April, ready to process month 1. But as I said, if it was before this SPP begins, there would not be anything calculating. And even in enter payments, this would show as 0 because nothing's due in the current period. So your process date can affect statutory payments calculating, and it will only pay up to and including the process date. Also in the summary tab of enter payments, we know that this is 1 week of pay, but if you did want to see how many weeks were included in this figure, use this little drop down to choose your SPP type. And this is like a shortcut to that SPP information in the record. So we can go to the entitlement tab and see, well, that figure must be for 1 week because that's how much is currently due in the period. So that's just a little tip to quickly get to that paternity pay information. So we'll just go back to the slides and have a little bit of a recap of what we did. So I recorded SPP in the quick SPP option, which is found in the employee tasks or the payroll links. And remember, you can also record it in the employee's records in the absence tab and SPP. I then checked my process date, and in enter payments, I could see that it was calculating that first week of SPP in the summary tab. And a little tip, if you did want to see a breakdown of that amount, click the little drop down arrow, select your paternity type, and that's a shortcut to the SPP information in the employee's record where you can check the entitlement currently due. So that is the statutory amount taken care of, but I am going to go and just dive into adjusting your employee's pay. Before I do go into this though, just bear in mind this is very company specific. It does depend on the contract that you've got with your employee, as well as any company policies that might be in place as well. And if you've got a certain way of adjusting payments which works for you, absolutely continue with that. But in this section, I'm just going to go through a few more common scenarios for adjusting pay. So you might either pay the employee's usual wage by topping up that paternity pay with salary, or you might just pay them that statutory amount. So we'll take a look at a scenario for both of those options. So I'm back in payroll, I'm in enter payments, and my first scenario is called make up basic. So scenario number 1, my company policy wants me to top up the paternity pay to their full wage. At the moment, we can see this employee's full wage of £2,000, which is what they normally get. But if we go to the summary tab, we can see that payroll's actually adding that paternity pay on top. So yes, my policy might require me to pay the full amount as normal, but not this much. So this is too much at the moment. So I want to pay them a total gross of £2,000 made up of paternity pay and topped up with salary. So this option here, Make Up Basic, does this by reducing the salary to accommodate for that statutory payment. And let me just show you how this works. So first of all, in the Payments tab, you just want to make sure that you've got the full amount for their salary in there. And then back in the Summary tab, just click on Make Up Basic. This message comes up just saying that you've selected to make up to basic the statutory payment for this employee. And to do this, the hours and number value of salary, which is my pay element, will need to be reduced. Do we want to continue? Yes. And straight away, we can see that gross pay is reduced to their full salary amount. And if we go back to the Payments tab, it's done this by reducing the hours and number value of the salary pay element, which ultimately reduces the salary. So now they are getting that full £2,000 gross pay, and that's made up of statutory paternity pay and topped up with salary. So that's Make Up Basic, and that is the first scenario. I'm just going to set that back to what it was before. And we'll move on to scenario number 2. So this is totally different. This one's called a manual adjustment. And this is for if you don't have a particular policy to top up the pay. You might just pay the employee the statutory amount while they're on leave, but you need to work out how much they're going to be getting paid for the other days that they've worked. So in my example, this employee's worked for 10 days in April before they went on paternity leave. And after the first week of paternity leave, they came back at the end of April and worked a further 7 days. So this might differ with your employees based on their working patterns or working days. But of the 22 working days in April for my employee, they worked 17. So out of this salary of £2,000, I need to work out how much salary they'll get for only 17 days. And I can use the payment screen to calculate how much this employee gets. So to do this, again, just make sure they've got their full wage in here. And then I'm going to click on this calculator in the hours and number box. And what I'm going to do is the days worked divided by the total working days that are in the month for this employee. So for this person, it's 17 days that they've worked in April, divided by the total working days in April for them, which is 22. I'll click equals and tab on my keyboard. And we can see that's took their full salary for 22 days, and it's told us how much they're going to get for 17 of those, and it's reduced the salary accordingly. You can also use this manual adjustment for leavers as well. So if you need to work out how much they're getting paid for a certain number of days before they leave, you can apply the same calculation there. And that is a manual adjustment in scenario 2, where you only pay the statutory amount when they're on that leave, but you need to calculate how much salary they're going to get for the rest of the days that they've worked. But I'm happy with that adjustment I've made to the employee's pay. There is just one more adjustment that I need to make, and that is to the employer's pension. So usually the employer is required to keep up with their regular contribution for the employee. And if we check at the moment, I'm going to click on employers. I can see my employer pension contribution there is £36.28. Now normally my employer contribution would be £44.40. But because of the manual adjustment we've just done, the salary's been reduced, and so have these contributions. So I need to override this pension contribution to make it the regular amount again. Now I would advise, do speak with your pension provider to see if this applies to you. You might just have to leave it as it is, but for those of you who do need to keep it at the regular contribution, because of that salary being reduced, you can do this in the employee's record. So I'm just going to use this icon as a shortcut to the record and go to Pensions, Manage Schemes, and Edit. And in here, I'm going to be able to override this pension contribution for the employer. It's currently a percentage in 3%, but I'm actually going to change that to a fixed amount of £44.40, which is my regular contribution. And I'll click OK and just save this employee's record. Now this will only change it for the one employee, so even if you do have other people on the same pension scheme, it's only going to be this employee which it'll change for. And if we go back to summary, I can see that's pulled through and I've got that regular contribution now. And bear in mind as well, so once the statutory payment has ended, you will have to go back into the employee's record, and in my case I'd have to manually change that contribution back to a percentage in 3%. But I'm happy with that, and the payment is done for me. So I'm going to close this and I can now continue with my payroll as normal. So I would move on to my next steps, my pre-update reports, uploading the pay slips, etc. And after this, it will be time to update the records. So I'll click on this. I'm going to take a pre-update backup as well, super important. So I'll work through the backup wizard. And I'm just going to call this pre-update April 2024. And to finish that, I'll just click next and finish. And with it being the first period as well in the tax year that I'm processing, you will likely get a few more reminders just to make sure that you've got everything ready for the new tax year. And you'll see it does mention small employers relief as well. So that's why we checked that prior to processing anything, just to make sure that was all in place. So I'll click OK to that message, just a reminder. And I'm going to click next and finish to update the records. And I can see last updated date now is the 30th of April, which is my pay date. I'm just going to skip ahead to the full payment submission now as well, and we'll ignore that late message. And I'm just going to submit this as normal. So I'll click continue, check over this company information, and click submit. And this is going to report the usual information to HMRC, so payments, deductions, and the total liability due as well. And of course, you can print the submission log as well, just to say that that's been done. Now, because we're reclaiming statutory payments, we will be doing another submission to HMRC to tell them that we're reclaiming, and therefore the payments due to HMRC will be reduced. But before I move on to that section, we will just have a little bit of a recap of adjusting payments. So the first scenario was make up basic, and this is for a situation where you're required to pay a specific amount, such as keeping up with the employee's normal wage. So make up basic will reduce the salary to accommodate for a statutory payment. The next scenario was a manual adjustment. So this allows you to calculate how much salary an employee will get based on their hours or days worked. So in my example, the employee worked 17 days out of the 22 in April for them. So I use that calculator to do the days worked divided by the total working days in the period, and that will reduce the salary accordingly. And last but not least was the pension adjustment for my employer's contributions. So do check with your pension provider first, but if you do need to override that contribution, you can do this in the employee's record, in the pensions tab, and manage schemes. And do remember you will have to manually change that back after the statutory payment is over. And now that we've done our pay run, I'm happy with everything so far, and I've submitted that FPS. It's now going to be a case of reclaiming these statutory payments. So in terms of reclaiming, I did explain earlier, all employees can reclaim at least 92% of parental payments. But if you're eligible for small employers relief, which I am, that'll be 103% instead. To get that money back at the end of the month when you make your payment to HMRC, the amount that you reclaim is taken away from the amount due. And the P32 does that calculation for you. So you can clearly see that amount that you need to pay, with that reclaimed amount considered too. So information on statutory payments and reductions in what you're paying across to HMRC are not included in the FPS, and that's why you'll need to send an EPS as well, so HMRC know how much you've reclaimed and how much you need to reduce your payment by. So let's go back to the payroll, and I'm going to take you through the steps of the EPS and reclaiming those payments. Because I'm reclaiming that SPP, which I've just processed in April, and I have until the 19th of May, so the 19th of the following month, to do this. Now, first thing I'm going to do is run the P32 report for April for tax month 1. I'm going to do this from my payroll link section, so you'll see P32, but it is also available in the post-update reports, which is just accessed above the employee list. So I'll click on P32 report again from the payroll links. And once the criteria comes up, just make sure the tax month is correct. So it's tax month 1, so it'll be 1 and 1. And once it loads up, in lines 8 and 9, I can see the amount of SPP recovered. And as a small employer, I've also got that NIC compensation. So this total is 103% of the amount that was paid out. A little further down in the report on line 16, I can see that total NIC amount that will be deducted from my total liability due. So the total amount due is lower than what was submitted on the FPS, and that's the reason that I need to send the EPS at the end of the month, so HMRC are aware of that reduction. And the EPS is a monthly submission, so even if you do run your payroll weekly, fortnightly or 4-weekly, you'll wait until your payment's due to HMRC before you send the EPS over. So that's the P32, and as usual, you can print this off and export and save this to your computer if you need to as well. So I'll close this report, and it's now time to submit that EPS. So you can find this just above the P32 report from this link section, or you can find it in the e-submissions and employer payment summary. So you do have an option of what to choose first. So we're actually adjusting our payment to HMRC because we're recovering statutory payments. So I'm going to make sure I select this option and click Next. It then confirms the tax month, so tax month 1. And the next screen shows the amount of statutory parental payments that have been recovered across the year. So this is a year-to-date summary. If I had other employees on parental payments a little bit later on in the year, it would then show those figures too as part of this year-to-date value. So I'll click Next, and if necessary, you can enter the CIS deductions suffered as well, so that year-to-date value. And same with apprenticeship levy if that's applicable. And you'll just click Next and Finish. And this is going to bring up the actual submission. So it does look very similar to a full payment submission. You're just going to click on Continue. Of course, check this information here and click Submit. And that's going to send across to HMRC. So once this has been successful, I'll now reported the reclaimed amounts for tax month 1 to HMRC. So HMRC can now work out the actual amount that I need to pay, which will match that total which was showing on the P32 report. And that is how the reclaim works. So just back to the slides. And let's say you got a little bit further into the tax year, but you'd actually forgotten to send the EPS. You can simply send one in the next available period because it reports the year-to-date values. So if you forgot to send an EPS, send it in the next period, and it will include values from any previous periods in the tax year that were forgotten. So to finish the main webinar content, I would like to end with a section on troubleshooting, just to help avoid some common problems or issues that you might have with statutory paternity pay. So one of the most common is when SPP has already been paid in the past. So when you enter the SPP again for another child, nothing calculates. So if an employee has had paternity pay before, there is some information that will retain in the employee's year-to-date values. So this will need to be reset to be able to calculate that new paternity pay entitlement properly for the new baby. And it's specifically the weeks paid in the year-to-date values which are retained, as you can see just in that screenshot on the right. And this is the case where the paternity period spans over 2 tax years, so it does retain for that reason in case it spans over 2. There are a few ways that you can clear those year-to-dates. So there's a manual way where you can go into the year-to-dates in the employee's record and reset those values. Or you can use the recording paternity screen, which I showed you a little bit earlier, and you'll see a prompt that comes up if there are already details. And this will give you the option to clear that information. So that is the message that you can see on the left now. So you do need to be careful with that message though, because if you are in the middle of paying a statutory payment, you don't want to clear that information by accident by clicking yes. So the left screenshot on this slide shows that message that you'll get when you click recording paternity while there are still details there. If you do see this window, try to get in the habit of clicking no, because that means that you won't accidentally clear those values. Now, if you do need to clear that information for a new child, clicking yes on that message will remove that previous information, and it also clears down those year-to-dates. So I'm going to show you this in Payroll, those 2 options there. So I'm just going to change my process date first of all to my next pay date, which is the 31st of May for me. And I'm going to show you someone who I know has been on SPP before. So employee number 5, they've definitely went on paternity leave. So I'm going to highlight them. And let's try and record paternity pay again for them for a second child. So from Payroll links, I'll click on recording paternity. And this is the message that comes up. So this is the one that was from the slides there. If you are in any doubt, click No. And what this does is brings up that previous information so you can double check and see what it is. In this case, it's old information, so I know it would be okay to clear it down ready for those new details. To clear it down, I could just click on Recording Paternity again and click Yes, and that would clear it down. Or the other option I've got is to actually go into the year-to-date values in the employee's record. So I'll open up employee number 5, go to Employment, and just at the bottom you've got YTD values. In here you've got a tab for statutory payments, and just at the bottom I can see the weeks paid for this employee for paternity pay is 2 weeks. Now if I went back to SPP in the record, so absence and SPP, and if I try to change this information for the new baby without clearing those year-to-date values, I just want to show you what will happen. So let's pretend it's the second child. I'll input those details for May. So 1st of May. And I'm just going to change this last day of work as well to the 30th of April. And pop in that second date as well. So they want 2 weeks of paternity. But remember, I haven't cleared those year-to-date values. So when I go to the Entitlement tab, I can see that the programme knows that they're entitled to the SPP. So they are entitled to that full 2 weeks. But if we look in this table at the top, there's nothing currently due for them. However, previously paid is showing 2 weeks. So the programme's looking at those year-to-dates and the retained information and thinks, well, they don't need SPP as they've already had their full entitlement. And that's because of those retained year-to-dates. So even in Enter Payments on that Summary tab, there would still be nothing showing for SPP, despite the employee being entitled to it. So for another child, let's clear these year-to-dates. And again, you can do this by clicking Recording Paternity and Yes to the message. Or I'm going to go into the year-to-dates, so Employment and year-to-dates. And I'm going to manually change the figure for the statutory payments back to 0. So the programme will now think they've not had anything paid to them yet. I'll click OK. I'm going to save the record. And now when I go to Enter Payments, let's double check and see if that calculates. And I can now see that full 2 weeks calculating for them because we've cleared those year-to-dates. And again, if you do want a bit of a kind of breakdown of why that's paying that much, click that little drop down, select your SPP type, and that's a shortcut straight to that SPP information. So we can see now currently due is 2 weeks. So that is a really, really common problem for SPP not calculating, where payroll holds onto that previous information and thinks that they don't need any more paternity pay. So remember, clear those year-to-dates if you're recording information for a new baby. Also, I touched on it before, but the process date is also important. So make sure this is correct, and the programme will work out what's due in the current period up to and including the process date. And a few other tips for SPP not calculating, so other reasons, might be that the average earnings are too low. So if that's the case, go to where you recorded the SPP and check the average earnings. And you are able to check the payments used to calculate them as well. Or another reason, you might have manual SPP selected by accident in the employee's record. So this would mean that the paternity pay couldn't calculate automatically, so you would need to untick that box. But you can read more about any of these issues and how to fix them on the Help Centre. And I have also linked articles throughout all of the slides in the presentation, just to make sure that you correctly record and process statutory paternity pay. So do download the handout, take a look at those links, and they provide a lot more further information on this. But that does bring us to the end of the main webinar content. So before we wrap things up, I would like to go through a little bit of further support with you. So for webinars, me and Duncan do run these throughout the year for Sage 50 Payroll. We've got lots coming up this month, including attachments, maternity pay, shared parental pay and more. So head to sage.co.uk/webinars or click register now on the handout to read a little bit more about those, and hopefully we'll see you all there. We've also got the Sage Help Centre, so all of the articles which I've linked today are from here. Super handy resource. You can search the knowledge base, access support guides, demonstration videos, recordings of our webinars, and should you need to get in touch, you can contact the experts as well. And last thing I want to mention is Sage University. So here you can set up a free account and you can access e-learning and bite-sized learning, as well as earning product certification as well. So if you're new to Sage or you've had it a while, just a great way to expand your knowledge on Sage 50 Payroll and other Sage products as well. But that has brought us to the end of our webinar on paternity pay. So thank you very much for your time this afternoon. If you are leaving us now, remember that you can download the handouts from today, which includes the slides, and feel free to copy and paste that Q&A as well if you would like to keep any of those questions or answers. One last ask from me as well, there is a short survey that you'll get as you exit the webinar. So me and Duncan would really appreciate it if you could fill that out. We do read all of the feedback, and it does go a long way, just helps to make sure that these webinars are the best that they can be. But that is it for paternity pay in Sage 50 Payroll. I'm just going to go on mute for a few minutes to help Duncan with those last remaining questions. So if you've got any burning questions, do get them in the Q&A now, and I'll be back in a few minutes to say goodbye. Hi everyone, that's just me back again. I do believe Duncan's answered all of those questions in the Q&A, so remember you can copy and paste those if you want to keep them for future reference, but that does bring us to the end of the webinar, so keep an eye on your emails for a recording of today's session. Feel free to watch that as many times as you want and look at those demonstrations again, but we hope you enjoy the rest of your day. Hopefully we'll see you on another webinar very soon, and on behalf of me and Duncan, we'll see you next time. Goodbye.